The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 25th, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. How about we have an extraordinary one? You know, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but most importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, we've got you covered. You can let those fingers do the walking. You can send me an email, steve@tfnn.com, and inside the Tigers Den, well, any ping will do. So let's go ahead and get this show started on magical, magnificent Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 146 points. She's printing out at 26,178. S&P is up 11 points. NASDAQ 100 up 36. So it's green across the board. Even the spot volatility index is up 5%. Or 66 pennies. Something to think about. You've got the gold trading down $5, testing support as we speak. Silver's off 8 pennies, trading out at $15.82. Light sweet crude is where we're going to start today. It's down at $1.97, and the reason we're starting there is because Tom G writes in, and Tom says, "Good afternoon, Steve." Well, great afternoon to you, Tom. Can you give me your outlook on oil as I'm long the SCO? So that means that is the inverse ETF for oil, believing that oil is going to pull back and from Friday. And the question is, should I take my money now? Also, if you have a chance, what are your thoughts on TZA? So first, let's go take a look at light sweet crude, Tom, and see if we can identify some level of support for light sweet crude pulling back. And the level of support really that you and I would be paying attention to is coming from the daily time frame chart. That's the panel on my very right-hand side, your very right-hand side, as you watch us on Tiger TV. And what you'll see is the number there to pay attention to, well, just a couple things. One is 55.61. You're at 55.34. If price closes over 55.61 today, then the pullback has been nothing more than a test of support. If, on the other hand, now we do see that the color of the bar is orange, which suggests that there's a new profile that is trying to form. Doesn't mean that it will. So you'll want to check back tomorrow, see if it has. At this stage, let's go with the data that we have. 55.61 is the number. On a 60-minute, 2-hour, 5-hour time frame chart, we're not seeing price at any level of support. That doesn't mean that it's not. If we go down to one more level lower, meaning a 30-minute time frame chart, we're just looking for profiles. There's one that formed, but it is above price. And it formed really as we came on the air at 1 o'clock, and that's more bearish than it is bullish. So I think for you, you've been in it since Friday. You like taking profits, so I'm not going to talk you out of it. I would talk you into staying with the trade if price closed underneath 55.61, because that would then suggest to you and I, Tom, that price could pull back to the 53.39, 53.83 level out there. That's the bottom and center of that TAS market profile. So I hope that helps you out. You asked about TZA. That means what we really need to do is go take a look at RUT. And if we go take a look at the Russell 2000, let's do this. Let's take a look at the cash index out here and get a feel for what it is doing. Because if we were to go look at the equity futures contract, voila, here we are. What you will see, and that's the very right-hand panel of our screen as well, what you will see is that price is well above any TAS market profile. So there's nothing there that you and I can use. In other words, support out here is at 15 and a quarter. And it's trading at 15.94. It has made a higher high today. That's a beautiful thing. Let's just take a look at the cash and see. That was the equity futures contract we looked at. If we look at the cash indice and we're looking for a potential signal, a reason why Tom G or anybody might entertain a short in TZA, it would be that it appears, Tom, as of 1:11 in the afternoon, that today could be a Tommy DeMark setup 9 count. As we talked about last week, Friday was number 8. Today looks like it could be number 9. All the price has to do is close above this candle that's got the 5 above it, from the date. That's 4 trading sessions ago, and that was really 5 trading sessions ago, 1, 2, 3, 4, but depending on whether you count today or don't count today. Let's just go with February 19th. And let's go with the close on that trading session, Tom, was 1564.90. As long as price closes above that, we get to count number 9. Does that mean that price has to stop here? And the answer is no. In fact, we saw that the last couple of times off of the bottom, when we've had number 9 show up, Gordie Howe, number 9, January 16th. And remember, the high in this case here with price moving higher can occur on bars 8, 9, or 10. We don't have 10 marked. We just call it the day after 9. Makes a lot of sense. And price pulled back. Well, actually, it didn't. So that was not a topping signal there. There was a slight pullback on February 6th, but right into support Stevie's green line. And that's really the key level out here is 1571. Now you're at 1594. So that's a pretty decent move, a 20-point move or so from where we're trading right now. Now, today's candle, by the way, in the cash indice, it is confused. It is befuddled because you had a gap to the upside, and now you have what looks like a shooting star candle. So you got one bullish, one bearish message out here. So the daily time frame chart that we just looked at has some potential because we can't use the equity futures contract. Well, we can use it, but if we use it, it says, geez, I don't see a top in place. Now, that's looking at our E-signal charts. If we go take a look at the Russell 2000 and we take a look at our Ninja Trader charts out here, the other thing I would ask you to do, Tom, I assume that you've got access to this, just draw a trend line. From the high out here, this is the Russell 2000 equity futures contract, and from the high I'm referring to is September 4th. Just simply go ahead and use the high of September 21st out there. And that's a decent trend line, which price closed above or is opened above that level today. If it closes back below that, closes back below the high from November 8th, you might be onto something. That high is 1589.20. It really and then you've got 1576.20 as the price level to be watching for at Stevie's red line number out there to confirm. Otherwise, it would just be a natural retracement in a bullish market. So the question was, do I see any signals for you to go into TZA? I see the beginning of what looks like potential, but really nothing confirmed, not as of 1:14 in the afternoon. So keep your eyes out. It's Steve Rhodes with TFNN. Dow's up 134, S&P's up 10. We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back. Dow's up 133, S&P's up 11. Let's go to our next question. This one from Sophia. Sophia writes in, good day, Mr. Rhodes. That's my father. Yeah, no, but thank you. Good day to you as well. Hope you got some rest this weekend. Got some pretty decent rest. Do you have an opinion on DIOD as a bullish play? Perhaps wait for a pullback. Thank you. So if we go take a look at DIOD, we're going to start off like we normally do. Take a look at our 3 different time frames out here. That's daily, weekly, and monthly out here. And what you're going to first notice is that prices above resistance. Even today on the daily time frame chart, there was a new profile that formed a few days ago. Last week, looks like maybe on the 21st. It was a bearish structured profile. Now, as long as price, Sophia, closes over 42.61, nothing more bullish than a failed bearish pattern. That actually wasn't a bearish. Did I say bearish? Let me start over. It was just simply the top of the box. It was a bullish structured box out here. Nonetheless, it's still resistance. So close about 42.61 says you would be chasing this. So not necessarily the best thing to do is to chase this necessarily. As far as where price is headed to on the long haul, as we pull this back, nearly everybody in this equity is in a winning position. So it's Party City out here inside of Diodes Inc. There's an A to B equals CD, seems to have vanished from my screen. We'll go ahead and put this back in here. And so it is at least completing that. It's taken years. This A to B equals CD on the monthly time frame began back in November of 2008. That price projection was 44.67. And the high so far today has been 44.27. That's not to say that this is going to go ahead and pull back out here, that this is it, time to sell, something along those lines. But I just throw that out there as a piece of information, trying to plot where this has gone, because you asked the question, you know, is it whether I had an opinion, but as a bullish play. So you're thinking of, in your question was, should you wait for a pullback? So I think you should definitely wait for a pullback. On Friday, we would have said that pullback might come in at around 39.41 or Stevie's red line. It's green. 40.44 is the number. A bit of caution exists in that price is moving higher, doing less relative energy. It did that today as it moved higher. We can see it's made prior highs and bottoms with that same type of pattern. Needs a bearish reversal signal of some sort to form. You don't have that. I'm not saying that you're going to have that. If you do have that, then you're going to be able to wait for a pullback, and it's probably below 40.44 out here. I think at this stage, unless you've got some really great reason to chase DIOD, I would just be patient and continue to monitor its price action out there, especially on a pullback. So thanks for writing in. Hope that helps you out. No other questions in the on-deck circle out here, so feel free to let those fingers do the walking. Send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question. So let's go take a look at, just do a little surfing out here, surfing safari, and get a feel for what's going on. If we take a look at this chart here, this primarily here for Jay, if Jay is in the Tiger's Den, because Jay likes to know where those market profiles are. So we do have some cemented new profiles. They did take in effect. They were in effect from last week. The ones, there are several. Well, there's three, really. The ones to be watching today, so it appears as of 121, will be the top of the profile in the ES mini. That's 27.98 or 28.03. So it's really only 5 points and a couple of ticks above that level. That would be on a closing basis. If we close back below 27.98, and this really is for you too, Tom G, out there, is take a look at TZA, because you'd like to see some synergy of maybe some potential of a top pullback retracement along those lines. You'd really like to see some synergy here. And we know we're not going to get those signals necessarily from the Russell 2000. But the top of the box, or closer below the daily on the ES, 27.98, that would be something to think about. Closing below on the NQ, 71.13.75, that would be something to think about. That's about another 17, 18, 19 points or so from where we're trading right now in the NQ. In the Dow, it's not likely, although it could happen. That number is 25.974. You're at 26.156. What happens if price closes above those levels? Then you absolutely don't have a failure of a support level. Now, we're using the top of the box, by the way, as support at this stage here. And that is a support level when you are trading above resistance. Old resistance becomes support. The ultimate support inside the ES Mini is at 27.10. The NQ 69.61. The Dow is 25.650. We're staying out of the litter box inside the Russell 2000 because at some point in time here, a new profile is bound to form. So when we take a look, that's one thing that you and I could be looking at out here. If we go look at short-term time frame charts, well, no. Let's do it the opposite. We're looking at daily. Let's go look at the 5-hour energy drink chart out here. So let's start with Russell 2000 since we had a question about that. We'll try to start with it. I just have to expand this. Come on. There we go. So here's the 5-hour time frame chart for the Russell. What we can see is at this stage here, price has been moving higher, doing less relative energy. You've got a candle that does not complete until 2 p.m. It's 124. Thus far, you have a key reversal, potential key reversal session, meaning the high of the prior bar has been exceeded. The low of the prior bar has been exceeded. And so far, you've got at least one tick in the opposite direction of that trend. The trend was to the upside. This would be just simply one little tick, a red-bodied candle. You also happen to have a bearish reversal candle, a dark cloud cover, and prices trading below Stevie's green line. Mouthful, but what does it say? It says support on this is the top of its profile. That's 1587. Below that, 1573 would be the number. Let's not stop there. Well, we could stop there, but we won't stop there. Let's just go to the Dow on its 5-hour time frame chart. No idea what we have out here. What do we have? We do not have any signal that I can see, that I can call for you, that says we've got on a, well, that's the daily chart. We already knew the daily chart. Sorry about that. Let's go to the 5-hour chart out here. By the way, the daily chart, there was no signal there to say that there's a top that is in place. On the 5-hour energy drink chart at this stage here, there's also nothing. Nothing at this stage. That's the Dow equity futures contract. If we take a look at the NQ, so it's only Russell that is giving a maybe a hint out here. In the NQ, everything looks relatively good. You do have what could be a bearish reversal signal, but we don't see any topping signal, so to speak, out here. So just because a bearish candle shows up doesn't mean the market is bearish. It just means for that time frame, that one specific time frame, compared to the prior candle or prior two candles out there. Price would need to, the NQ that is, need to close below 71.13 to generate any kind of potential warning. That's by 2 p.m. The next candle starts at 201, doesn't complete until the contract closes later on this afternoon. If we take a look at the ES Mini out here and we look at its 5-hour time frame chart, now here price has been moving higher due to less relative energy. So Tom, not that this is just for Tom, what we can see here is you can see that bearish reversal candle. What we can also see is that price has really just come back to test support. That's Stevie's green line. It looks like about 2801. Let's use 2801 as the number out here. And this should be bar number 8 of that potential TD setup 9 count. So what's all that mean, jelly bean? Means, look, go with the daily time frames first. Those levels of support need to be broken, in order to suggest any potential for some sign of a top out there. Otherwise, you could be an intraday trader like Tom G out there. Steve Rhodes with TFNN. That's not a bad thing. We'll be right back. We both know you've got what it takes to crush your goals with the will to make it happen. So why haven't you accomplished it yet? For most, the answer is fear. Fear is that limiting factor that stops us from getting what we truly want, but it doesn't have to. That's why on Wednesday, February 27th from 5 to 6 p.m., I'll be hosting my 1-hour workshop, Overcoming Fear in 5 Easy Steps. Hi, I'm Steve Rhodes, the 2018 Market Timer of the Year, author of Mastering Probability, and an expert in human emotion. Subscribers to Mastering Probability gain free access to this extraordinary workshop where I'll coach you how to bust through your barriers of fear. How you respond to fear is what sets you apart from the rest of the crowd. Look, this could be the most valuable hour we ever spend together. So come to the homepage of TFNN.com and begin your 30-day risk-free trial of Mastering Probability and take the next step towards the life you deserve.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Nick A. writes in, and Nick says, I hope you had a nice weekend. I did. Weather was great here. North of me, they were hitting all-time highs out there at 90 degrees. So a little toasty down here, but I spent a good part of the weekend working on Wednesday's workshop. Which is there's no such thing as easy steps, but the 5 steps to help anyone overcome fear, which is really going to be a cool workshop. Now, this is something I absolutely have a passion for. Look, I have more of a passion for that piece because it's really dealing with the human emotion and the reasons why we do what we do out there. Calling stocks and what they do is to me is really an easy thing. Like here, we're going to go take a look at Nick A's question, which is about looking at the Dow on a daily and a 16-minute time frame. We go look at each of those charts, and it's tangible. What I mean by tangible is we're going to go right to a chart. There's a set of tools that certainly I use. If you're listening to the show, you're using them as well, whether it's just gaining that information from what I share with you or as a newsletter subscriber or however it might be out there. And it becomes easy because it's really the computer system telling us what's going on. None of us can really say what's going to happen next out here. Only Jay in the Tiger's Den, when he gets that 8-ball working, can he tell you what is going to happen next. But short of that 8-ball working out there, I'm not sure how I diverged to the 8-ball, but it doesn't take me long to just serpentine, which reminds me of that Peter Falk movie, and I forget the other actor in there. In any event, the difference is when you're dealing with emotion, most time, emotion is invisible. So teaching you about price moving higher or less relative energy or bullish or bearish structured profile, I can show it to you. I can show you the reasons why. You look at it and you say, okay, I get it. Absolutely get it. But now teaching you a concept which is something that's kind of invisible, but yet it's real, perhaps more real than anything else. It impacts you really want to understand why you do what each of us, I think you want to. Look, it's all about relationships, the relationship you have with the market, with your friends, with your family, spouse, whatever it might be. And I tell you, if you come to this workshop, there will be, first, it's decades, the in-laws, there you get the in-laws, that's movie Tucker. There's decades worth of information that I've gone through, been taught, utilized, and they're extraordinary tools. There's a little commercial that that we did, obviously, to make people aware of the workshop this Wednesday night out there. And in that, I say it may be the most valuable 60 minutes that you would ever spend with me. Of all the statements in that workshop, that's one that is the most absolute truth. That 60 minutes, way more valuable than any 60 minutes I could give you on pattern techniques, because that one, which is so-called invisible, is the one that really controls our decision-making process. And that's really what it's all about. Well, so Nick, let's get back here. So that's what I did with my weekend out there, because I just have this passion for that. And for me, it's always about trying to deliver the best that I can in the time frame that I have with you. And for me, the cool thing is trying to find a way to condense those decades into 1 hour. And so that means you start big and then you start getting rid of the stuff that becomes noise and you don't need. You're probably saying to me, you're just rambling here is kind of noise, so get rid of it. No, let's get to Nick's question here about the Dow. Let's go to the 60-minute time frame chart here for the Dow. And to do that, as you know, we look at the Dow equity futures contract. We're going to look at the cash indice out here because we have just too much limited information. Like take one of the patterns that you and I look at. We've talked about this already. We take a look at, so if Nick is a trader on a 60-minute time frame chart, he's wondering what the message is, Dow equity futures contract. He is aware that when the high was made, it was made as a TD setup 9 count was forming. Remember, the high or low, in this case here, the high can occur on bars number 8, 9, or 10. Well, this happens to be bar 10, not bar after 9, formed. Now what we've got at 134, now this hourly bar doesn't close, Nick, until 2 p.m. We're off the air. But here's what we know right now at 134. Let's say you were short for some reason, Dow equity futures contract. Stevie would say stay short, but watch 26, 138. Because if price closes above 26,138, then a key level of support, the bottom of a 60-minute profile, has held. If price closes under 26,138, what you would be looking for is for price to pull back to that little red solid line. That is from the time frame of 2 o'clock this morning. The bottom of that session becomes the target. That's 26,059. If price were to break below that, then you've got something more that's going on. That's what the 60-minute time frame chart would say. So, Nick, on a 60-minute time frame, you're watching 26,138, especially at 2 p.m. If price closes above that and you were short and you were like Tom G on a short-term basis and you don't mind taking your profits, I'd take your profits. Just like we said with regard to light sweet crude, we said there was a ceiling out there. Not a ceiling, but a level of support. Price closed below that support, I said you'd stay short light sweet crude. Same thing here on a 60-minute time frame for the Dow. Now, that's what the shorter-term time frame is showing here, the 60-minute time frame. So we know where the next targeted area is. Of course, the question would be, hey, if price closes below your second targeted area, that red solid line out there, where is it headed to? Well, you know, let's go take a look at the daily time frame. Now, you had asked about the Dow. So let me give you the Dow. First, second, third. Let me just try to find out Dow Jones Industrial Average. Okay, we're going to pull that over. Now, that's going to be different than the Dow Equity Futures contract. So I'm going to, before I go to the cash contract, the question was, or should have been, if price breaks through support on the 60-minute time frame, what becomes the target? There'll be a couple of them, but I would just go back to the daily out here and say Stevie's green line in this 25,880-ish type area. I can't actually read the number right now, but that's right around there. That really would become the target. There's nothing wrong with price pulling back to test support. And in essence, that would be support. On the Dow cash indice, the number for the day would be 25,860. Now, 25,860, you'll clearly see that when we put the chart up here for the Dow Jones Industrial Average. Now, it just so happens that the cash indice has got a different numbering count than the futures contract. Why is that? Well, because this is just trading for 6.5 hours versus nearly 23 hours on the Dow Equity Futures contract. So the highs and lows and so forth are going to be different. Now, here's what we know right now. As long as price closes today above number 5, bar number 5 out here, you could have a, you would have a 9 count out here and the potential for a high, or it could be tomorrow. But remember, we've got to see support fail. And we looked at those TAS market profiles, and now on the Dow, you've got 25,860 would be the number. So, Nick, thanks for writing in. I hope you had a nice weekend as well. Let's go out to Denver. No, let's go to San Jose. Let's go to San Jose and speak with Tony. Tony, thanks for calling. Thanks for holding. How are you today?
Good, Stevie. How about you?
I am doing well. Hey, we're going to go to a break here in about 15 seconds, but I know you want to take a look at USO, which would be long light sweet crude. Are you in it? Looking to get in it? Tell me what you're doing, and then we'll come back to you right after the break.
I'm kind of short, and I'm looking for USO to go below 10. Is it possible?
Okay. We will talk as soon as we get back from this break with Jose. Take a look at USO, and then we'll also go out to Ron in Denver and take a look at natural gas. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're going back out to San Jose. We're going to speak with Jose, who's calling about USO. And you've actually shorted USO. Is that correct, Tony?
That's correct. My name is Tony. And actually what I want to convey my thought, and then you can look at. According to me, the candle of February 12th is the key for me.
The candle of when?
The highs and the lows of that candle are 1113 and 1134 with 17 million shares. So according to my thesis, this 1113 of February 12 candle needs to be broken for it to go $10. How do you see my thing, and how are your views?
So my views, Tony, would not be based on the chart inside of USO. And the reason that I would really ignore USO is the trading vehicle that you chose at this stage, or the ETF, in order to play light sweet crude. And that's really the key for me, Tony, is that you're playing light sweet crude. And so for me, I need to know what light sweet crude is doing. It's totally irrespective of the ETF structure. And so the best information I can give you is the underlying instrument for USO. To short USO, or to short light sweet crude, I should say, you can also use the inverse, which is SCO. So SCO is another way for you to play that, and that's inverse. And so as light sweet crude is falling, SCO would be rising out there. But that's neither here nor there. Those are just choices of ETFs to play light sweet crude. And so what we have to understand is, what is light sweet crude doing? And the real key, in order for light sweet crude to go lower, or in your case USO to go lower, light sweet crude has to break through support. The support price for light sweet crude today is going to be $55.61, and price at $55.52. Doesn't matter what it's trading at 144. Matters what it's trading at as the contract comes to a close this afternoon. And so the price to be watching for light sweet crude that really needs to break is going to be that 55.61. Now, 55.61 comes into play a couple of different ways out here. 55.61 in essence is, and I just have the continuous contract right now up here, is my little green line. and it's really right at about that exact same price point, maybe a penny or two underneath that. So all that price is doing so far is pulling back to test support. I have no idea where the close is going to be. If price closed over that level, my conclusion is that price just pulled back to support and it held, and I would be concerned about staying on the short side of light sweet crude. Whereas, Tony, if it closes below that level, then it's just the opposite. Then I can say, okay, I can see why you would go ahead and stay with that short position. But as opposed to looking at a candle on the 10th or the 11th or the 12th of February, what you would really be watching in order to stay short would be then how price handles 53.39 to 53.83. Now, I give you that information today because that's what the support levels inside the market profiles are providing with you to you and I. The problem is, and you would need to call back tomorrow or listen in on the show if I happen to cover it, is that the bar that I'm looking at on a daily time frame here for light sweet crude has turned orange. When a bar turns orange, it's a signal that there's a new market profile that is trying to form. Doesn't mean that it will, but it's trying to form. And if we look back here in the trading day of November 27th, you had an orange candle. The following day, you had a brand new set of market profiles. If you come back to December 26th, the following day, you had a set of profiles. As a new profile formed out here in January 14th, it was an orange candle. So these candles are important to us, but we don't know what those profile levels are going to be. So, Tony, I know that's not exactly what you were looking for because you were focused on the USO, but the only way for me to give you accurate, good information is to pay attention to the underlying instrument, and that's the future contract that USO is really based upon. Does that help?
Yeah, thank you. I'll watch your show. Probably this is such an important thing you will cover in a couple of days anyway.
Yeah, my pleasure. All righty. Hey, thanks for writing in, and best of luck on that trade of shorting USO. Let's go out to Denver and speak with Ron. Ron, thanks for calling. Thanks for holding. How are you?
Very good, Steve. Thank you for your time.
My pleasure.
I'm long calls on UNG. I went long about a week and a half ago at 23, and I just looking at the futures contract. What should I be watching for? What kind of a target do you think would happen? Good question. I have another week and a half to go.
Yeah, so the target then becomes, and Tony, if you're listening in, watch this as well, because here you can see how Ron and I are going to use profiles to assist them with that trade. And so we've got natural gas trading at the high of the session, but more importantly, it's trading above 277. So 277 was the top of its box out there. And as long as price closes over that, then that means price doesn't have resistance on a daily time frame and should continue moving higher. The target that I would come up with, Ron, would be the swing point, and the swing point is January 16th. And that's anywhere from a price point of 311 at the low to about 340 at the high. So it's a fairly wide swing point out there. That's about the only thing that I can see at this stage. Is there something that you're looking at that maybe I've overlooked out here with natural gas that I should? And is it the March contract? I don't know. Is the March contract the active?
Yeah, no, this is just the option play for a week from Friday.
Yeah. No, I'm just making sure I've got the active.
It's March 8th.
Got it. Well, that's what I see at this stage. So it looks good. I don't know what's going to happen between now and then. The shorter term time frame charts. I'm just looking. I'm trying to do two things at one time. The shorter term time frame charts aren't giving you or I a signal to exit the trade either. Everything is above resistance out here with natural gas. So I'm going to go with the for the swing point, the target area is all the way back out here at November. Another spot to look. Here, I'm going to pull this over here. This is the March contract. Another spot for you to be looking for is going to be, there's a daily time frame chart, January 18th. But that's still around the 340-ish area out there as well. So everything looks pretty good. I don't see any reason for you to take your money off the table just yet.
Okay, I just wondered, is there any seasonal thing to be aware of in natural gas at this time?
Yeah, I don't know. I used to have a chart that I could go to pretty quickly for natural gas.
Okay.
There is a seasonal aspect, but I don't know what that is. Let's see, Mr. Bill's writing in. Mr. Bill's got a seasonal chart here, so let me see if I can put this up on the screen. So what is this, Mr. Bill? I don't know how to read this just yet, so I won't put it up there because I don't want to misread it.
It's okay. I appreciate your time.
Yeah, you know who else you could call and ask about seasonality for natural gas is give David White a call. I think he's got the seasonality of natural gas down pat. Okay.
Okay. Hey, thank you very, very much. I appreciate it.
My pleasure, and best of luck on that trade. So right now, folks, we got the Dow. She is at 26,153, up 121 points. We'll be right back after this break.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Nico DeHaan and Paige Clark have launched a special for a limited time only. Save 25% off Primal Edge and Health Signals. Just use promo code HEALTH for Health Signals or use promo code PRIMAL for Primal Edge and save 25% off instantly when you sign up. All the details are available on each order page at TFNN. Certified personal trainer Nico DeHaan's newsletter Health Signals comes out twice a month and is packed with great information on health, fitness, and diet. Primal Edge is specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox, and contains a special blend of ionic soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form. This sale won't last long. Sign up now using promo code HEALTH for Health Signals or PRIMAL for Primal Edge and save 25%. For all the details, visit the front page of TFNN.com right now.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we got the 2-minute wrap-up out here. So where are we at in the markets in general? If we go back to the Dow, so here's the bullish and the bearish case out here. The bearish case is the one where today ends up being a Tom Mark setup 9 count, and today or tomorrow ends up being the high. We see price pull back. A change in trend would require support to be broken. The first level of support might be the top of that TAS market profile. Whether it's that or it's Stevie's green line at 25,864, they both would need to be broken in order for any type of pullback to be more than just a retracement back to support. And that's really key out there. So there's the potential. We don't have the same type of signals in the futures contract as we talked about earlier, but here's the futures contract, and we've got wave number 4 potentially out here, but that's really about it. We've got price getting back to a swing point area where there were previous highs. Those were December and November, and that's a chart that's on the left-hand side of the screen. Price is already above the December level. That's 26,103. That was the high from December 3rd on the equity futures contract. Then you go back into November, which is 26,283. You're looking at the left-hand panel. That would be the next level that price would need to close over to then say, you know what? The Dow priced in dollars, we're going all the way back up to the highs. In fact, I would say if it clears 26,283, you're not just going to go back to the highs, you're going to make a new all-time high out there. Now, it's a pretty good chance that that is the likely outcome here. And the reason why we say that is because if you look at chart number 2 is the Dow priced in euros, which earlier in the day was trading above its swing point from November. Swing point high from November. That's at 23,026. If you're trading the Dow in euros, you're really only interested in what's the Dow in euros. You're not really too worried about what's the Dow in dollars. Well, that's not true because you and I look at the Dow price in all the major currencies out here. So that's the bullish case. Watch the Dow priced in euros. If we don't see a top here by Wednesday, we're going to make new all-time highs in the Dow. It's just that simple. Folks, thanks so much for being here. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Tuesday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.